Hi, this is Robert Kiyosaki, and you're listening to Capital Hacking. This is the most important thing you can listen to today.
No, it's terrible to interrupt the flow of your favorite podcast, Capital Hacking, with this pesky commercial, but let me do it anyway. Forgive me. That is right. We have to talk about the best event coming up in April. It's April 19th and 20th. It's Learn and Grow. It's that accountable equity investor community event open not only to our current investors, but to anyone who wants to see the power of an accredited investor community. It's going to be hosted at one of the beautiful accountable equity resorts called LBI National. It's near Renault Winery, actually. It's in New Jersey. We'd love for you to register and find out what everyone is talking about and why this type of investing, this type of mastermind community might be right for you. Check it out at accountableequity.com. Choose, learn, and grow. Thank you.
Here's the one. I have a dream. With great power comes great responsibility. I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella story out of nowhere.
It's in the hole.
That the only thing we have to fear is fear itself.
Capital Hacking begins in 3, 2, 1.
Welcome back to the big show, Capital Hacking. It's Josh McKellen. Super grateful to have time with you in your car, Mrs. Smith and Mr. Billy Bob. But John Edwin is sitting here ready and willing and able to host us into the future.
You know, Josh, I have met a Mrs. Smith. I don't think I've ever met a Billy Bob.
Yeah.
But
They're listening right now on their treadmill, and one of them's driving a Tesla.
I believe it. I believe it. As long as it's not in too cold of areas to drive that Tesla.
Why? Is that Teslas don't like cold areas?
Yeah, I hear there's some situations with some batteries and some charging, and
I didn't know that.
It might be in Chicago or something like that. But we're not here to talk about the Tesla situation. We are here to talk about Litan Yahav, and what an amazing man, what awesome wisdom that he bestowed on us today. He's a Go Abundance brother. I had the opportunity to sit with him for almost a whole day during a conference at the table, and he is a wealth of knowledge. He's currently the CEO of Vyzer, Vyzer, which actually I'm not even going to give it away. I'm not going to tell you what it is.
Oh, okay.
But he also talks about how him and some other people created this 3D diamond imagery that he exited, and it's still being used today.
Right. And that's where I want to pick up. The reason you're going to want to stay through the whole show is we do a true case study of how to start a company, finance a company, sell a company. And he did that with that 3D diamond imaging company. By the way, it's really curious how he figured out that was a business that was needed and how he did it. Really curious. So I'd love for you to hear that. That's a great case study that's going to open your eyes to how deals get done. And then he's going to explain private equity in such a way that he's going to explain all kinds of definitions. He's going to review what's better, liquidity in your assets, like being able to sell a stock tomorrow, or illiquidity. And he debates which one's better. That'll be the first time people ever debated it. And I wonder which side you'll be on when he's done. He's also going to talk about why private investments are a part of his portfolio. And he talks about, I use them sometimes for cash flow. I use them sometimes for tax mitigation. And then he's going to tell you what happens and why so many people are buying private assets, like private investment deals. It actually creates the need to build a family office where you keep track of everything. And he has figured out for $30 a month how you can build the resources of a family office, and keep track of all these great deals you're a part of. So there's a lot to take away from this. I would say this is no diamond in the rough. This is the real diamonds, baby.
Let's go.
This has been an exciting endeavor, is to get Litan on the show. So I'm glad he's here, man.
I'm excited to be here.
Yeah, absolutely. And Litan and I got to sit next to each other in Lake Oconee, Georgia a few months ago, got to start to get to know one another. What an amazing guy. And Litan, if you could just, bring us up to speed, tell us a little bit of your background and so that we can connect with you.
Right. Cool. Well, first of all, like I said, I'm super excited to be here with the both of you celebrities. So some background, personal. So I'm 41, married, I have 3 kids. I was born in the US. And when I was 9, we moved to Israel, which is where I am now. I go back and forth to the US, Israel a lot. It's a weird time to be, say that I'm from Israel. There's a lot. That's a whole 50 episodes to talk about. We're not going to go into that. So I served in the Israeli Navy for 6 years and then founded a startup in a very weird, crazy industry. We did 3D imagery for diamonds, hardware, software for photographing diamonds in 3D for trading purposes.
Wow.
Which is a whole story on its own. So it's basically, and it went well, and it turned out to be the standard for diamond imagery today. So almost every diamond you'll see online is photographed and displayed with our technology. But we sold that company in 2015, made some money. Didn't make tens of millions, but made enough and just started to deploy it, me and my co-founder, into a lot of different types of deals. I like to call it private equity. We can talk about that. But a lot of passive investment deals and also some active ones that were a big mistake. And then at some point that grew and grew. And a few years into that, our spreadsheets began to break, and we built ourselves a software to automate the whole management and tracking of our investments. And then a bunch of people wanted that as well, and it turned into a new startup. And so we launched that about 3 years ago, and that's what we work on today. So that's a quick rundown of my background.
Great rundown. That is a great rundown.
That was fast.
I love it. I love the journey there, though. So we're going to let you become our teacher, and we're going to talk about private investing and private equity, but we're going to do it with case studies. We're going to do it with the 2 case studies of your life. Let's go back to 3D imaging for diamonds. Let's learn how that was capitalized, if you don't mind. How did that get off the ground? Who brought capital to the table, human and financial? And let's learn from that as a case study, John. What do you think? And then it went full cycle and you sold it. So this would be a great case study, folks.
Yeah, let's go.
So the background of that is a crazy story. So my military service was totally not technological. So it was, combat stuff and operational. And so, after the military in Israel, you're 24, you go to school. I studied law and business. And during my last year of school, I got accepted into this entrepreneurship program, which is funded by Sam Zell.
Okay.
And this program, basically, you get together a bunch of people with an objective to build a company. I find an idea, a problem to solve, raise capital around it, blah, blah, and then do something with it. And so we found ourselves, interviewing a lot of different people in different industries, no background whatsoever in the diamond world. But we had a friend who knew a friend and took us around the diamond exchange building. And Israel used to be a huge diamond trading. It still is one of the top 5, but it used to even be bigger. And we went into this building and saw how the way diamonds are traded, complete craziness, high security ever. But then you get into these buildings and you go back 50 years back in time. It's crazy.
Give us an idea.
So imagine the craziest security you can imagine, the Pentagon, right? You go in, they scan your finger, they take a picture of you, and they give you a card. You can only go to a certain floor, just crazy security. Then you get past security, and then you go up these up the elevator, and then you have hallways, just long hallways with a lot of doors, and then notes on the door saying, I'm looking to buy this and this type of diamond. I'm looking to sell this and this types of diamonds. And you have freaking brokers walking down hallways with suitcases full of diamonds, knocking on doors, looking to buy and sell diamonds. That's craziness. And that, not to mention the global trade of diamonds, right? So, people polish a diamond or manufacture a diamond in Mumbai in India, but they need to sell it to a dealer in Hong Kong who then sells it to a store in the US, who then sells it to another store, the whole way so they ship the diamond for inspection. And it's just really, really old fashioned stuff. And we're wait, 21st century, you can buy a Porsche on eBay. Well, why can't you just display a diamond online, play around with it, and decide if you want to buy it based on that? And so, our ignorance, which is our advantage, we weren't in the confinements of this, family run businesses that you grow up into it and you're used to the way things are done. For us, it's there's no way in hell this is how the 21st century of diamond trading looks. Let's how hard could it be? Let's build a machine where you put a diamond in, it takes like a 3D image of it, you put it online, you sell it. It was freaking hard, but we were lucky because we, the human capital of it, and this is where we were lucky, is, when we set out to research this and build this business, we were like, all right, we're not, me and my co-founder, we're not technical guys. I mean, we know tech, but we don't have we can't program or code. But we found this guy who photographs, shoes in his apartment for pack shot images to sell online. We're like, hey, we brought him a diamond and say, hey, can you take a picture of this? Like 360, straightforward. We left this huge, super expensive diamond with him. And he created this amazing 3D image of this diamond, which we then took and we went to, different investors in the world, in the diamond world, the e-commerce world in Israel, and said, hey, you see this 3D image of a diamond? Well, we can do this at scale and build a machine that does this automatically. We're raising some money. And then we were lucky enough to, meet the right people at the right time. At the end, we also convinced that guy who took the image in his room of that image to quit his job and come join us as a third co-founder. And then we built a machine, a prototype, raised more money, opened an operation, a diamond exchange, and that grew. So it grew, and pretty quickly we raised another round of funding and then sold the company about almost 4 years later. So that's the quick.
Let's break it down. The Sam Zell part, it's fun how you brought that up at the beginning. So Sam Zell, the great entrepreneur, just recently passed away, correct?
Yeah, 6 months. Right.
And he has a book that if you are into thinking big and thinking outside the box, the book is called Am I Being Too Subtle by Sam Zell. And it is, man, he sounds like a bull in the china shop sometimes. Like he seems really amazing. Billionaire, obviously, when he passed. So he found angles to mostly in real estate, private equity is what I remember, but there probably were other areas. So you're saying he had a program at the school where you were at in Israel to help people like you find an entrepreneurial endeavor. Was he actually involved in any way, or is it just a program he created?
So he has 3 of these programs around the world, 1 in Israel and 2 in the US. And he had this approach where that at all these, universities and colleges, there are buildings that have, the whatever name building. Right. And so when the dean of where I went to school came to Sam Zell to ask to raise money for a new building, Sam Zell told him, listen, I don't want my name in a building. I am willing to take the same amount of money and fund a program that will, create the next generation of leadership and entrepreneurship in Israel. And so that's what he did. And so his involvement was funding the program, but also we'd every year, that year of students would be flown out to the US. And then we do it was 20 students, right? So it's basically, we split into groups, probably around, I think 8 or 6 different ideas, small teams. And then we'd present our ideas to Sam and he'd give us feedback and maybe connect. A few times they'd come out to Israel and we do some also stuff like that. But that's his involvement. He was really, also behind the scenes, he was really involved.
Yeah. So this is a lot of capital. And, as we talk about this is a lot of capital that you were around, right? You're in a program that he created, but now you're also going to benefit from the brand name of that program. That's already capital. Like when you're laying out your business plan to investors to raise the money you needed to make the machine, you start with credentials like that, which are real. Then you go into the fact that you were qualified to be in that. So that's like a vote of confidence in your intelligence, perhaps. And then here you are face to face with Sam Zell once or twice. And how often did you actually make a pitch to Sam Zell?
No, so during the program was once a year, but during after we founded the company, I met him a few times. I even flew out to New York at one point to have breakfast with him, to talk about fundraising. Maybe I even managed to pay for breakfast, so that was for me like a win.
Good. That's a big win. You always do that, by the way. That's a lesson. Where did you know to do that? How did you know to pay for a billionaire's breakfast?
I'll always try to pay for lunch or dinner with anyone I'm with. It's just a bigger win if with someone at that caliber. So
big win. This is a lot, guys. I'm trying to absorb it myself here because this is, first of all, proximity. It's like a lot of the things you and I talk about with our community work, John, and building out community of private investors and private deals. But This is so big. What is the one thing that everybody in America would know Sam Zell did, since not everybody on this show now knows who Sam is? What's one of the big deals he cut? Wasn't he like famous for, can you remember any of the major companies that people would know?
Yeah, he owned it at one point, I think the Chicago Tribune or like one of those large newspapers. And I think, I don't remember which buildings, but he had a ton of real estate.
He basically, he was part of the Blackstone founding too. I think he was part of, either he sold the deal to them to get that set up, but he's been around some of the biggest kind of transactions at the pivot, at changes in the economy. He like swept up millions and billions, worth of real estate at a time. I can't remember all the different examples from the book, but they were all household names.
Litan, amazing story. How did you know how to sell that business? Like, explain how that worked out with the 3D diamond imagery.
All right. So keep in mind, this is a different world than, the typical real estate, private equity type world. This is sort of building a company that's not profitable, that's selling a dream and potential of what this can become with the scale to achieve that, the ability to scale and achieve that dream. So it's not that we were profitable and making a ton of money, but we had, we developed a really unique piece of technology and started to capture and create and own a lot of data around diamond imagery. So we photographed consistently thousands of diamonds a day. And so we had this huge data set of diamonds. We began to build this brand, which creates, a hook and a moat. And then sort of at some point, the firm that invested in us was an e-commerce website. It's called jamesallen.com. They're a very large website in the US. And they were already so dependent on us because all of their diamonds were photographed with our technology. When they went to raise another, larger round of funding, which they were a bigger, private equity backed company, like different type of private equity, right? But private equity backed company. And afterwards they gave us an offer to buy us out, both with a cash and equity type deal. And the way we looked at it is this is a synergy here. If we become one, it'll be 1 + 1 = 3. And that for us seemed bigger than just our company on its own. So that's why we decided to sell. And it turned out well because they were then bought by a huge company. And so our equity deal was even better than the cash deal at the beginning. So, I mean, it turned out well. And again, we didn't make tens of millions in this deal, but we made enough at that point to start to invest in other stuff.
And they valued you somehow based on the contract they were giving you. Like, it's always so interesting how all that works.
I think the price itself is super tricky, and it's just the amount of money they're willing to pay for the additional equity to fully own the company. Because what we discovered afterwards was that when they raised their money, the larger round, the investor require that they buy us,
right?
That they fully own. So then, because one of their competitive advantages as a company was our technology, right? And so they want to make sure that no one else would. So it was sort of a bigger thing we didn't know about, but it turned out well.
That's great. And in the end, you took the Sam Zell. So you're sitting with Sam Zell at breakfast. You paid for it. And one of the topics is, how are we going to capitalize on this business plan that you seem to like, Sam? We're hustlers. Did he give you an idea how to raise the first bit of capital?
So this was after. So the reason I flew. So this is a funny story, right? So when we got that offer for acquisition, we were also going through a fundraise, and we didn't want the acquirer to think that we really need them to buy us out because. So I flew out to Sam to show that I have another, ace in my sleeve to raise capital from, so that they wouldn't think that we're with our back against the wall having to sell. And I have this huge purse, like huge, deep pocket individual who I'm meeting tomorrow. So I just want you guys to know. And so that was the motivation to go and meet him at that point in time. And for me, it was also on a personal, something that I wanted to do anyway. And so it was like, it was a win-win. I mean, the advice, it's these small scale startups, $1 million, aren't something that he really, is involved in it, or he wasn't involved in those at all. It was more like, the tens or hundreds of $1 million checks. So it's different. It was a different bargain.
It is different. You know what, though? You would have thought, this is me just saying out loud, you would have thought people at the smaller scale of private investing would have been in the coattails of Sam, saying, Sam, when you see stuff you like, we have a bucket of $1 million to $5 million for early stage startups that you believe in. But anyway, back to the final part of the story. And I just want to give you a lot of credit, because there was probably years that went by from the time you joined that program till you sold it. And were there times during that period where you're like, why are we wasting our time?
Oh, dude, so many of those moments. Building a startup is an hourly roller coaster. You can wake up in the morning and say, this is going to be the best thing in the world. And then for lunch, you're like, damn, how are we going to finish the day, the week, the month? It's a constant roller coaster, the startup world. And I don't know what happened, but I decided intentionally to do it again. And so, yeah, it's definitely not something you think that you're always, 100% confident that this is going to be the next best thing.
Amazing. So did you go from selling the diamond imagery company to Vyzer? Was Vyzer your next thing?
No, so we sold the company in 2015, had an earn out period for 3 years, which was basically golden handcuffs for us. And then 2018, me and one of my co-founders decided this is enough. Like we need something different. Our third co-founder, that tech guy, stayed on, still is running the company until today. And so in 2018, we left. We only founded Vyzer the end of 2020, beginning of 21. And so, And so we traveled a bit with our families and, just enjoy this like freedom of spending time with things that matter. Like at the end, that's why we make the money, right? For the freedom.
Yeah.
But we still have this bug to build another thing. And so we iterated different stuff, like crazy across the board ideas. I don't know if you guys want to dive into those type of stuff, but it goes all the way from scanning bridges and roads with drones to a wet wipe dispenser to put in bathrooms to wipe your butt. It's like totally weird stuff.
Well, definitely I can see how the one came from your first idea, right? I mean, you figured out an angle on unique imaging of diamonds, goes to bridges, goes to...
No. So one day we just... The wet wipes was the first thing we started. But then we got a call from a VC where friends will say, hey, we're looking at this company and we'll only consider to invest if you guys decide to join as co-founders. And then we checked that out for a few months and then
we were really curious. So you mentioned the VC group that was trying to buy this digital imaging of bridges actually contacted you guys. How did you even know each other? And why did he contact you?
Yeah, so we're pretty well integrated within the local Israeli VC startup scene, and we have really good friends in the whole industry here. And so at some point, my co-founder and I, Tomer, we were sitting at Google for startups and just iterating different ideas. And we just got a call from a VC friend of ours saying, hey, listen, I have this really interesting company. They're already a proper mom and pop shop that are operating, and they want to spin that off into a startup that does 3D scanning of bridges with drones. And and the guy tells us, I thought about you guys, and these guys don't have any startup experience, and we'll only consider investing in them if you guys join. And we're like, well, that sounds interesting. And we started, we met with those guys and iterated for a few months, but then decided it was just too complex because a startup on its own is very high risk. And then creating those relationships with people that are already running a business and then turning that into a startup is a whole different risk. And we just did, that's too many risks on risks on risks. And so we dropped that. Yeah.
All right. So can you take us through Vyzer? What's going on with Vyzer? And also, in the beginning, before the recording started, you talked about private equity and how it's a little different meaning in the tech world.
Yeah. So my investing experience started in 2015 when we sold that company. And we had this windfall, had some money, and what the hell do we do now, right? And in Israel, and I like to tell people this is very weird to Americans to hear, but in Israel, if you have $50,000 aside, you always find someone to invest with and buy in like an apartment in Berlin that you've never seen. And so like there's always people investing passively, and there's always people raising money from passive investors. And so everyone knows a guy here. And so we just started to meet with people around us who were in either experience similar situations of a windfall event or invest in private stuff, because we knew we did not want, the public. And another important aspect is in Israel, our retirement. So we, by definition, must deposit money to a retirement account, and our employer does as well. So everyone in Israel is under this impression that we have a retirement set up and we can't do anything with it. And so any excess cash goes into privates usually, or it's like DIY or self-managed. And so that creates a situation where there are a lot of, general partners or syndicators or capital raisers in Israel that do real estate abroad in the US and Europe. So we started to invest with people who do real estate in the US we as LPs, them as GPs in different types of real estate. At the beginning, we knew a guy who sold active, full turnkey real estate properties in the US. We bought 2 of those in Ohio. Turned out to be a total shit show. And at the same time, we also invested as LPs in some multifamily deals with some people we know here in Israel. And then that's where we started to learn the ropes of what does that mean to be a limited partner, and what questions do we ask, and what are red flags, what are good things, what we like, what we don't like. And that grew over time, and we understood, whoa, this is actually a private equity investment because it's a private deal in an equity position and not a debt position. It's passive versus the active stuff. Being a real estate investor, for us, we learned it's a freaking spectrum. Everyone's a real estate investor depending on where you are on that spectrum, right? And we just did more and more of those deals. We decided to put more into passive LP positions and less, and did not do any active ones, because for us that was just like, even property managed properties for us was a nightmare. And so we decided just to do passive. And then as time went by, the years went by, and we built our own portfolio, and we didn't make enough money to have a family office or anything like that. And so we just managed it on our own, and our spreadsheets began to grow, and bank accounts and cash flow and documents and K1s, and it just became a mess for us. And so at some point we're like, I get an email from a GP, like, holy crap, who is this person? How much I invest with them? And these are good problems to have, there's no doubt, but still, like, for us, it was like, we need a system. So we hired an engineer, and we built a software for us to automate, track all that stuff. And then a bunch of our friends wanted it as well. And it turned out to be something more people wanted. And we decided to build that into a new startup. So that's sort of like the whole story of the background of passive investing, Vyzer's fundamentals and that stuff.
No, it's becoming more common that people are having the problem you're describing. There's starts with the idea that you want to have direct private investing rather than public market investing. And I guess there's a fundamental that we glossed over that. Why not just put your 50 grand into Wall Street mutual funds or some other stock market in another part of the world?
I think that some of it should be there. Honestly, I think diversification is important. I think it's all about what's your number and how much do you want to achieve in terms of growth, and how you are, how much cash flow you need, how much tax benefits you need. And so like there are a lot of things that you take into account upon deciding where and how to invest. I also think that, a lot of people say, well, why don't you just invest in like a publicly traded REIT? Why do you want to invest in a syndication or something like that? And for me, it's like, well, first of all, returns aren't as good. And second of all, the so-called liquidity that they have in the REIT basically means that the value isn't really the value of the underlying asset. And so basically you might as well just invest in the S&P 500, and there's no real difference in my mind. And so and the returns that we were seeing in these like private investments were just like exceedingly better than anything else we were seeing.
Boy, you have some wisdom there that I've never had anybody say on the show. So REITs, we're not going to go into a whole exercise here, but your point is liquidity in REITs. I thought you were going to say the other thing that I do hear about REITs. We all understand REITs do have some tax strategies. They're not the same offsetting tax advantages of direct investing, but the magic of liquidity. Everybody talks about the liquidity. I always get concerned about the liquidity a little bit, because it means if there is a devaluing of the public value of that stock, we'll call it a REIT unit, that could actually harm if liquidity happens, right? It wasn't in the last 2 years when we still started having bank problems. Well, banking problems on REITs were pretty dramatic because it exacerbates across a whole portfolio of real estate properties, all backed by major debt. And the debt is changing all the time because assets are changing. So your REIT might have been awesome 3 years ago with very affordable debt, but each 3 to 5 years, they have to change the debt, right? Or they have to get liquid. And so there were times there where people were selling their REIT stock. And I thought, well, that's devaluing the REIT stock, even though the assets may still be good, right? Is that what you mean, Litan, where you're saying it's not exactly correlated to the real estate?
Yeah, I heard what you were saying. Sorry about that. The liquidity aspect is something that I have a very, I don't know, unique or different approach to. I believe liquidity is a phrase that is used too lightly and as an advantage where it shouldn't be an advantage. I think there's an advantage of having illiquid assets. It protects you from making bad decisions. I think that every asset at the end of the day has liquidity. It's only a matter of a discount rate. So when you look at the public markets, right, the liquidity there many times is fake because it might be liquid, but if the market tanks 30% and you can sell, does that mean it's liquid? Like if I want to sell my real estate property and I drop at 30%, I'll sell it within an hour, right? Is that liquidity? Like, honestly, I mean, obviously there is value to cash. And I think there's this difference between cash and liquid investments. But I think that liquidity in the public markets is overrated. Specifically also, you can also leverage. There's a lot of ways to tap into liquidity and illiquid investments. But I just think that liquidity is a phrase that, basically it gives financial advisors the ability to sell more products because it's liquid.
Wow, John, we've got so many golden nuggets here, John, in this show that I mean, we're going to get to the end of the show and be like, this was one of the most rich conversations on topics we all touch on and don't go deep on.
Yeah. Something I just wrote down that you said, Litan, that I've never heard anyone say is illiquidity is actually an advantage from making mistakes. That's powerful.
Yeah, because people make stupid decisions in investing.
You're right. People make stupid decisions and jump the gun without doing their homework. And actually that beckons my next question is, how do you make decisions when you're investing either as an LP or GP in a syndication? What are the factors you look at?
This might sound really trivial, but I think the people I invest with, I have this approach that it's not a scalable approach, right? I only like investing or prefer investing with people I can trust they're not going to screw me over. Like that's the fundamental for me. And the problem with that is you can't invest with the big guys because you can't really get to that level of understanding who those people are and make sure they're not going to screw you, steal from you, whatever. The second thing is there's value with investing in medium to smaller operators because the bigger ones will usually take bigger deals and they'll leave the smaller medium ones with a lot of meat on the bone. And then, that's where the medium small one but then there's always risk involved in that, right? Because, the bigger the operator, usually the more experience they have. And so it's just a trade-off, I guess. But for me, that's what I prefer. And I think I mentioned this before the show, but the asset class for me isn't that important. What does matter, what is important for me is, the risk reward based on that specific asset. So if it's a good operator, then the investment itself needs to make sense from a risk return perspective, right? So if I'm looking at a deal that has a lot of value add, a lot of development work, there's more risk involved in that, and so the returns or the potential return should be much higher than a regular yielding small value add type deal, right? So I've seen. If I'll talk with a developer who's building, even doing a flip, right, raising some cash for a flip, and they're saying, yeah, and this is like a 15% IRR for you, and I'm like, what the hell it is? I mean, why would I want to take the risk and do that if it's not 30% for me? At least from an equity position, it's not worth it. And so it's like, even if it's a really good person, the risk reward needs to match the asset or the deal itself in my mind. It's like if you look at, I think the highest risk investment, which is probably writing an angel check to a startup.
Can you define that? Yeah, just
yeah. An angel check is like when you put capital into like a company that's building some sort of, like mine, like building a startup, taking an idea, trying to build something out of it with the potential to be worth a gazillion. So the upside there is huge, thousands of percent or hundreds of percent, returns. Extremely high risk though, right?
Yeah.
And so like for me, it's always about those, the operator and the risk reward.
And so, fast forward with all this deep thinking, you've really reflected on this. I'm on your website today, moving to the Vyzer comment. So Vyzer is a necessary technology for a person with your ideas. Your ideas are private investing, a lot of principles around, do I need liquidity right now or not? Do I, how do I value all that? Do I want the jumbo institutional private equity options, or do I want a medium-sized where I can reach the principles? Sounds like you're leaning more towards the medium to small, reach the principles. And that's where it gets voluminous, right? Then you have emails coming in from different sponsors. You have K1 documents at the end of the year for your taxes. So it was a pain point that led you to Vyzer. So how does Vyzer help with that problem? And if you want to define Vyzer a little more.
Yeah, let me clarify. Just so for us, it's all about the passive investing, and so the money should work while we sleep and grow and not. Obviously, if I were worth a lot more, I'd probably have a team, right, helping me manage everything I have. But we don't have that, and I don't think it makes sense for us to even think about that. And so for us, it's like, well, if I get an email from a GP, I want my virtual family office, which is Vyzer, to be CC'd on that email, and then with an AI to analyze it and then update or create an asset based on that. I want Vyzer to link into my bank accounts and track all the transactions in my bank accounts and let me know, all right, this investment received that distribution that you were expecting. This didn't. This is above or below. And then take also my, my brokerage accounts and my residence and my cost of living W-2, like take everything and just show it in one place and track it in one place and project it in one place and have my documents in one place and just be that one source of truth for my financial life and help me make decisions, which are more, tactical decisions. When you have multiple sources of income and also expenses, it's hard to understand how my future cash flow will look like. Like, I don't want to be cash poor, but I also don't want to be sitting on too much cash. And so I want to make sure my cash is always deployed. So I want to be ready. So I want to see a graph. Like, how will that look in the future? How did it look in the past? Am I on my right track to reach my goals? Like that's, and there's another really fundamental thing that I really love within it is not just helping me make better decisions on what I do, but showing me anonymously what other people like me are doing. Where are they investing? Which funds they're invested in, and more information around that. And so it's probably encompassing all that in one place. I hope that makes sense, right? There's a lot of wording there.
It painted a very pretty picture, to be honest with you. But it sounds like has it gotten traction? Like, how many users are on Vyzer today? So we're tracking about 4 billion in assets at the moment.
Wow, about 5,000 users at the moment. And we launched a product a little more than a year ago.
That's amazing. That's amazing pickup.
Yeah. And what really stands out is you said, we're not big enough yet for a quote unquote family office, but having Vyzer as your virtual family office, as you put it, like, and tracking everything and keeping it all in one spot. I think a lot of people will be very interested.
Yeah. We also, another thing that we hate is, and this is really funny. So all the GPs have different investor portals.
Yeah.
Oh yeah.
And one of the claim to fames for these platforms that sell these investor portals to GPs is that, we have a really good interface for LPs. And I keep on hearing that from these people, these companies that are selling it to GPs. I'm like, no LP wants to log into these portals and see it. Doesn't matter how good the UI is, the user interface is going to be. I don't want to have 50. I want everything in one place. So our customers don't even have to log into any of the portals. We just retrieve all the information for them from the portals into one place.
Okay.
Which is like another.
That's some sophisticated stuff, because we're talking about data encryption. We're talking cybersecurity. This sounds like an extremely expensive project you put together here for yourself, right? I mean, you're saying you can see into the investor portal and access data. Wow. It to me as an outsider, it seems like you must have layers of security built in here.
Yeah, listen, I'm not going to, there's also team involved in it, right? There's levels of that, and also ensuring team and security there as well, and privacy. There's a lot of aspects to it, because we are essentially operating a virtual family office. Because let's be honest, there will not be a situation that will have 100% automation coverage for everything. So there has to be some manual involvement. And so there's a lot of issues that go into, protection, privacy, when it goes to that as well.
Yeah, I love it. No, I love it. Hey, it's been awesome getting to know you. I feel like we have to have you back on for a couple of these topics. We'll do deeper dives, but how can the audience listening today reach out to you, learn more about you and Vyzer? And would you mind spelling it, because we haven't?
Yeah, for sure. First of all, I'm pretty active on social media, Facebook, LinkedIn, Litan Yahav, or Vyzer's VYZER.co. Litan at Vyzer is the way to reach me. This has been fun, guys. Thanks for having me on the show.
Amazing. Thank you so much.
No, it's going to be wonderful. People are going to love this episode. I'm already thinking about some takeaways for myself. So thank you so much for doing this with us, Litan.
All right, guys. Have a good day.
Cheers.
Damn straight. We just got
buddy.
We got to the end of another great show. And everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity, because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.